Food prices push Nigerian annual inflation up to 11.61% in October. South Africa junk spiral may deepen as S&P likely to cut outlook. An IMF agrees lending program with Democratic Republic of Congo. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. Let's get the show started now with the markets. And most major markets on the African continent we track here looked subdued at intraday, except for the JSE index in South Africa. Now the index was up 0.85%. Here in Nigeria, the equities market fell 0.33%. And the EGX 30 in Egypt was heavily hit, down 1.01%, sustaining last week's losses. In Kenya, the Nairobi Stock Index closed negative on Friday. And the markets in the Middle East were not left out, as the indices there equally trailed towards the red zone at intraday. Abu Dhabi's index fell 0.27%, while the Dubai's index declined 0.86%, as Arab Tech Holding dived 10%. In Qatar, the index was down 0.20%, with telecoms and energy firms moving sideways, while Ooredoo lost 1%. However, in Saudi Arabia, the benchmark index gained 0.66%, supported by bank stocks, with ROG Bank increasing 0.8% and National Commercial Bank adding 1.3%. In Europe, stocks traded mostly higher in the morning amid ongoing focus on developments in U.S.-China trade talks. And talking about trade, the issue of Brexit and its potential consequences for trade is also being discussed. And that is where I will start my conversations with Conrad this afternoon. Hello, Conrad. Good afternoon. Good to see you. It's been a while.
Yes, Jimmy, great to be back on Channels TV. Thank you.
You're welcome. Anyway, Australia and 14 other countries have expressed their concerns to the WTO about Brexit and its potential consequences for trade with the EU and the UK. Some countries are reported to demand compensation for potential losses. How important a topic is this where you are in Frankfurt?
It is an important topic, Jimmy, and not so much because people here would be afraid about potential compensation that might have to be paid to our trading partners, but it's important because it highlights that the WTO is back in the game. Countries like Australia, but also the United States, addressed the WTO with their concerns about trade relations with the EU and with UK after Brexit. And that's really important to note. Even the United States, where the Trump administration has been so critical about the multilateral approach that is addressed via institutions like the WTO. Now, they too think that the WTO, the World Trade Organization, is really the place to go when you want to negotiate trade. What this is also sort of highlighting is that in the future, the United Kingdom will not be the #1 door, the gateway to Europe for other English-speaking countries, like it was in the past. You know, with many Brits in Brussels, it was easier for English-speaking countries to get access to the European Union, to negotiate relations with the European Union. In the future, they will have to do with Brussels and less representatives from the UK, which will likely make things a bit more difficult.
Okay, now let's look at the markets. The German stock market has gained 6 weeks in a row. The US market is on a record high. Give us an outlook for what traders in Frankfurt are expecting this week.
Well, of course, as we are, heading towards Christmas, everyone on the trading floors is now discussing whether we are going to see new all-time highs for the German DAX, our stock index here. At the moment, the index is still has about 300 points to go up to an all-time high. This week, the trading will be less influenced by earnings reports than in the recent 2 weeks. You know, the earnings season is slowly coming to an end here in Germany. so that economic data will get more in focus. Tomorrow, we'll get an update on factory orders, and later this week, we will get new purchasing managers' indices from both Germany and from the euro area. And remember how last week our gross domestic product here in Germany came in as quite a surprise. Germany managed to avoid a technical recession, which was, of course, very good news. Now, many people here at the exchange are hoping that we're going to see more positive surprises this week.
All right, Conrad, just before I let you go, Saudi Arabia has set the valuation for the IPO of its oil corporation, Saudi Aramco, at about 1.7 trillion US dollars. That's less than the Saudis had targeted originally, isn't it?
Absolutely, you're right, Jimmy. Up until recently, Prince Salman, the ruler of Saudi Arabia, had talked about a target of a 2 trillion US dollar valuation. Now it's only 1.7 trillion, which is still a lot of money, of course. Saudi Aramco, with such a valuation, will be valuated higher than Apple, which is currently the most valuable listed company worldwide. But still, this process of IPOing Saudi Aramco shows that it's a bit of a difficult sell to make. Obviously, there was not enough or not overwhelming demand from international investors. That's why Saudi Aramco scrapped the idea of having its listing not only in Riyadh in Saudi Arabia, but also potentially in London or New York. This plan was scrapped. Now only Riyadh, which is also, you know, a bit of a reason for international investors to be skeptical. The dominance of the Saudi royal family on this company, Saudi Aramco, is really total, and they're only floating or selling with this IPO a very small portion of the company. So you really have to trust in Prince Salman and the royal family about what the future of Saudi Aramco will be. And many people I talk to here are quite reluctant to have this trust.
All right, Conrad. Well, I guess we have quite a lot to chew in the course of the week, and let's see how it goes. Thank you for your time.